One of the most overlooked but extremely important part of being a property investor is to ensure that you don't leave any deductions on the table. And one of the most commonly overlooked areas is the depreciation. And today I'm talking to an expert on depreciation, Brad Beer from BMT. And Brad is a quantity surveyor, and he's going to run us through some of the most important aspects of depreciation reports and how it affects investors and their bottom line. So Brad, help me out here, because in this world of quantity surveyors reports and depreciation, there's some confusion I find. And that is, you've got to have property that appreciates in value, clearly. Yet you can depreciate it. How does that work?
Yeah, look, Stephen, it's really interesting now, because people are going, what do you do? Depreciation schedules for properties, and hang on, we're buying properties to make money, not to lose money.
Yeah, exactly.
And look, we want the value of the property to appreciate, most definitely. We're buying property for that reason. But effectively, the building itself and things within the building are actually wearing out. So one day, the carpet's going to wear out, the hot water service is going to break down or become old. So they're kind of depreciating in value. The actual structure of the building itself is also sort of depreciating in value, because buildings don't last forever. So the tax office puts an effective life on these things and says we can claim the cost of them over that period of time.
Okay, so let's just break that up then, because you've got fixtures and fittings, and we've got the building itself. Now, so the building, as I understand it, you can claim that over a 40-year period?
Yes, currently the tax office says we put a life on that of 40 years. So that means you get to claim 2.5% of the structural cost each year. So, put simply, if it costs $100,000 to build, you'll have a $2,500 claim each year for 40 years.
So you have a 2.5%, and how long can you claim that over?
So that's for 40 years, and you'll get to claim that $100,000 or whatever the cost is over that 40-year period.
So you can write the entire cost of the building off?
Yeah, the structure. It's the concrete floors, the walls and the roof. There is a few things that are excluded. Not much though, really just soft landscaping. That's a non-depreciable item, but pretty much everything else is claimable over that period of time.
Okay, so $100,000, 2.5% over 40 years, that means you're writing off the entire cost of the building over that period of time, because you're getting $100,000 back from your tax, aren't you?
Yeah, well, you're getting $100,000 as a deduction over that time, not $100,000 in cash, unfortunately. Sure. But over the life of that property, you actually claim the full value.
Okay, and so how does the ATO feel about that? How do you substantiate that? Well, this is the cost of my building.
They set the rules and said that we're allowed to claim it based on the construction cost. So we either use a cost that's available, or as quantity surveyors we estimate a cost, and they'll accept that. And that's how we work out the numbers, based on the rules. So
are you guys accountants then, or it sounds like a bit of a crossover between an accountancy and quantity surveyors?
We're not accountants. We've had to become a tax agent recently for the preparation of depreciation schedules, but I can't do your tax return. Many times people say to me, but I've got a good accountant. We work alongside the accountant to prepare just the number for depreciation. Now, it relates to certain things in the building, and it's one of all these numbers that go into the tax return. We don't calculate your interest or any of those sorts of things, or look at how much money you made. Just that depreciation number, we provide a report to tell the accountant exactly how much that is.
Okay, so you're working hand in glove with the accountant. You're substantiating the figures, and then he's putting that into the return.
Yes.
Okay. So that's a building, but there's a whole bunch of stuff inside that building: hot water systems, carpets, tiles, blinds, oven, all that sort of stuff. Right?
Yes.
So how do they work all that out?
We have a look, and you get a percentage of all these things as a claim, and what it comes down to is a number. And depending on the type of property and the construction cost of the property and the value of those carpets and things in it, we'll work out what that number is. Now, what it becomes is a non-cash tax deduction, because we're making...
So, repeat that again. A
non-cash tax deduction.
Right.
So, because it's the building getting older and wearing out, it's one of those deductions that's really handy, because you're not paying for it. A lot of the other deductions in relation to property, obviously, you pay for first. This one you don't pay for. It's one day my building's going to fall over maybe or wear out, and so the tax office is allowing me to claim part of the cost of that each year. So at your tax rate, if we find you, let's say, a $10,000 depreciation deduction, then you basically at your tax rate get whatever it is back in that financial year in cash.
Okay, so somebody on 30, 40 cents in the dollar, that's between $3,000 and $4,000, like a gift almost, huh?
Basically, yeah. I often have this question of like, how long's this been going on?
And how long has it been going on?
Look, since the 80s. Effectively, they brought in the legislation on the building in 1985, but the depreciation on the plant and the other bits have been going for longer. Yeah, it's been going on for a while. Just people often don't know it's there.
Okay, so if they don't know it's there and they've got an older property, can they somehow go back and say, hey, I've missed out all these years of claims?
Yeah, it's a good question. It's a bit like if you don't pay your tax, the tax office will find you and make you pay it.
Do they?
Yeah, they'll probably give
I
you a
don't know
fine.
about that.
They'll probably give you a fine as well.
Right.
If you didn't make these deductions, and look, depreciation is often not very well understood. If you come now and you watch this and go, I didn't know about this depreciation in the past, you can actually go back and amend a couple of years of your tax return very easily. We do a report that starts from when you buy the property, and you can go back and say, look, Mr. Tax Office, last year I forgot to claim this $10,000 or whatever it is, and can I have some money back, please? And they do that.
So Brad, we've been working together on Quantity Surveyors reports now for coming up close to 15 years now, right? Yeah. So for most of our clients, we do everything for them. This is another aspect that they don't have to take care of. How have you found this relationship working from your end?
Oh, well, look, Stephen, it's been really good. The fact is that so many investors actually don't understand depreciation. So you guys always get them to go, as part of the process, we need to organise a depreciation schedule, which we've done for many years, which has been great, 15 odd. Yeah. And that way they don't actually have to think about it, because you guys actually do it and go, the important things are X, Y, whatever else they are, you guys find the right property and do all that sort of stuff.
Yeah.
Select one that you believe is going to grow.
Yeah.
And make sure you've got a depreciation schedule organised so you get as much money as you can out of it.
So the more money we can get back from the ATO via these legitimate building and depreciation claims, the bigger the tax return for the client. And what does that mean for them?
More cash flow.
More cash flow.
Less of a cost to own the property,
Right.
Which is great.
Yeah. So we'd like just to tie all that up as part of our service, and in conjunction with the accountant, so for our clients, they don't really need to do anything on this front, other than knowing that it's all been in good hands, right? Yes. Brad, we tend to specialise in a certain type of property, and that's traditionally is a 4-bedroom home, double lock-up garage, approximately 200 square metres. So does it confirm with me that stands to reason that a bigger home, such as that, you'd be able to find far more to depreciate than, say, if you bought a studio apartment?
Yes. See, the depreciation has a relation to construction cost. So the more it costs to build, the more depreciation you're going to end up having. Okay. Now, with a new property, which you guys get involved a lot in, everything in there's new, and construction costs today are always more than they were 5 years ago or 10 years ago. Yeah. So the more it costs, the more deductions you get, and also, if it's second-hand, then you've got second-hand stuff. We have to put kind of a second-hand value on those things. Now, old property still definitely gets depreciation. Anything is always worth asking the question. Mm-hmm. The fact is it's a bit less, so newer property definitely gets more deductions. Yeah. It
sounds as though it's a good idea to get good advice right from the outset when doing this.
Yeah, and look, making sure that it's done properly from the start is very important, so that you're not just leaving your money with the tax office unnecessarily, and that's about education, really.
And obviously, education, you can help us with that, because I understand you've got an ebook which our viewers can download to learn more on this topic. Should that interest them? Look,
there's you can go into a lot of detail in the ebook. Definitely, we can provide, and that will give you some real good detail. Knowing that it exists and knowing that it's there is the really important thing, and making sure you've crunched a few numbers on these things before you go, not knowing what's going on, so you can see what it's going to cost you to hold these properties. But there's definitely some good information in the ebook to start with.
Excellent. Thank you.
Thanks.
So here's our takeaway from that discussion. Don't leave the crumbs on the table. Substantiation of your building, your fixtures and your fittings can put a lot more money back into your pocket. If you'd like to learn more, Brad has offered his ebook and it's downloadable today on our website, so please grab yourself a copy. And if we can be of assistance to you with depreciation or any other aspects of property investment, please give us a call.